What happens when the world's largest asset manager, controlling over $10 trillion, collides with the biggest global cryptocurrency exchange, trusted by millions of retail traders? That's the battle shaping the future of finance today. BlackRock and Binance represent two entirely different visions for crypto's destiny. One rooted in traditional Wall Street power, the other in decentralized disruption. And the clash between them could redefine who truly owns the future of money. To understand this struggle, we need to rewind. BlackRock was founded in 1988 by Larry Fink, beginning as a small firm offering risk management. Over 3 decades, it quietly grew into the most powerful player in global finance. With its reach into pensions, sovereign wealth funds, and institutional portfolios, BlackRock doesn't just manage money. It influences governments, corporations, and even monetary policies around the world. For decades, it has been the ultimate symbol of centralized financial control. Binance, on the other hand, was born in 2017. Founded by Changpeng Zhao, better known as CZ, it started as a fast, user-friendly crypto exchange in China, before quickly moving abroad due to regulatory pressure. Within 2 years, Binance became the largest cryptocurrency exchange in the world by trading volume, its philosophy, accessibility, speed, and global reach. While BlackRock catered to pension funds and governments, Binance gave ordinary individuals from Nigeria to Brazil the ability to trade tokens with just a smartphone. So, we have BlackRock, the disciplined titan of traditional finance, and Binance, the rebel exchange of the digital frontier. But here's where the story gets fascinating. As crypto gained mainstream attention, these two worlds began to overlap. BlackRock, once cautious about digital assets, slowly shifted its stance. It started exploring Bitcoin futures, blockchain infrastructure, and eventually submitted its application for a Bitcoin exchange-traded fund. Meanwhile, Binance was facing growing regulatory crackdowns, questions about transparency, and the challenge of maintaining user trust while expanding at breakneck speed. If this comparison is interesting, hit that like button. It helps the channel grow and lets us keep bringing you these deep dives. Now think about the contrast here. BlackRock represents stability, institutional confidence, and regulatory compliance. Its every move is scrutinized, but also legitimized by the financial elite. When BlackRock applies for a Bitcoin ETF, markets surge because investors see it as validation of crypto's future. Binance, meanwhile, thrives in chaos. It adapts quickly, moves across borders, and finds ways to stay relevant even under heavy regulatory fire. For retail investors, Binance is often the first step into crypto. For institutions, BlackRock is the safe gateway. This tension raises a critical question. Who will dominate the future of crypto, the giant that brings Wall Street's weight into the digital era, or the agile player that gave power to the people first? As we move forward, we'll explore the strengths and weaknesses of each side, and you might be surprised at which one holds the real advantage. Because here's the twist. Sometimes the strongest-looking fortress hides cracks, and sometimes the smallest disruptor grows into an unstoppable force. And that brings us to the next chapter. What exactly are the technical strengths and weaknesses of BlackRock versus Binance? Stay with me, because this is where the battle gets even more intense. On the surface, BlackRock and Binance might look like they're competing in the same space. But when you dig deeper, their technical strengths and weaknesses reveal just how different their foundations really are. Let's start with BlackRock. Its greatest strength lies in infrastructure and trust. With over $10 trillion under management, its risk management systems, built through its proprietary platform called Aladdin, are considered some of the most advanced in the world. This system analyzes trillions of data points daily, helping institutions manage everything from pension funds to sovereign reserves. So when BlackRock enters crypto, it doesn't come with speed or hype. It comes with credibility, institutional-grade security, and compliance. For regulators, that's exactly what they want to see. An entity that plays by the rules, ensures transparency, and protects investors. But this fortress has weaknesses too. BlackRock moves slowly. It is bound by regulations, bureaucracy, and the need to satisfy cautious institutional investors. Innovation is not its natural strength. By the time BlackRock offers a Bitcoin product, retail investors have already been trading on exchanges like Binance for years. That lag makes it reactive, not proactive. And in the fast-moving world of crypto, waiting too long can mean missing entire waves of opportunity. Now consider Binance. Technically, it has been a pioneer. Its trading engine is known for speed, handling over 1 million transactions per second at peak. It introduced features like futures trading, staking, and decentralized exchange options far earlier than most competitors. Its global reach is also unmatched. At one point, Binance claimed users in over 180 countries. For the everyday trader, Binance feels fast, accessible, and ahead of the curve. But this advantage comes with fragility. Binance has faced multiple regulatory lawsuits across the US, Europe, and Asia. Critics question its opaque corporate structure, its past reliance on offshore operations, and the security risks that come with being the largest exchange in the world. Even a single hack or regulatory shutdown could shake investor confidence. And while Binance has built strong technical systems, it doesn't have the same safety net as BlackRock's government ties and Wall Street influence. Here's where it gets interesting. BlackRock's strength is compliance, but weakness is agility. Binance's strength is innovation, but weakness is regulation. In many ways, they are opposites, but opposites locked in the same battle for dominance. Think about it this way. If crypto is truly the future of finance, will it belong to the institution that plays by the book or the platform that rewrote the rules? Share your thoughts in the comments. Your perspective matters, and I'd love to see where you stand on this debate. Because here's the cliffhanger. Adoption is the real battlefield. It is one thing to have systems in place. It is another to win the trust of millions or even billions of users worldwide. And in part 3, we'll uncover how BlackRock and Binance are fighting for adoption, how governments are shaping their paths, and which one might capture the hearts of the next generation of investors. Adoption is where theory meets reality. You can have the most sophisticated systems or the fastest exchange, but if people don't trust or use them, it's all theoretical. BlackRock and Binance are fighting not just for market share, but for the hearts and wallets of everyday investors, and the strategies they employ reveal a lot about the future of crypto. BlackRock approaches adoption like a careful chess player. Its focus is on institutional investors, pension funds, and sovereign wealth funds. By bringing crypto into these traditional channels, BlackRock isn't just creating products, it's legitimizing the entire market. When a pension fund in Germany starts allocating part of its portfolio to Bitcoin through BlackRock, it sends a message. Crypto is no longer a fringe asset. Governments and regulators notice, and suddenly digital assets gain credibility that trickles down to retail investors. BlackRock's potential future is tied to integration with the established financial ecosystem. It isn't flashy, but it builds trust, and trust is the ultimate currency in finance. Binance, in contrast, focuses on the individual user. Its adoption strategy is aggressive, global, and highly decentralized. People from Africa, Southeast Asia, and Latin America, regions where traditional banking is limited, have flocked to Binance because it empowers them to participate in global finance directly. Its use cases range from trading and lending to staking and crypto payments. Binance's future potential comes from being the gateway to a digital economy where anyone with a smartphone can participate without intermediaries. But with great freedom comes great responsibility. Binance must constantly innovate while navigating complex, evolving regulations. A misstep in any country could slow down this global adoption. Interestingly, the two strategies are starting to intersect. BlackRock has hinted at working with crypto exchanges, while Binance has begun offering products more appealing to institutional clients. This convergence could redefine the landscape, traditional finance meeting decentralized innovation. Consider the implications. If BlackRock successfully bridges institutional capital with retail demand, it could create a network effect where crypto becomes a standard part of every portfolio. On the other hand, if Binance continues to dominate global adoption among individual users, it could maintain its position as the first choice for the next billion crypto users, potentially influencing policy through sheer market presence. Here's a curiosity peek. Some analysts believe the real winner won't be the one with the most money or the fastest engine. It will be the one who can blend trust, innovation, and accessibility. And that's exactly the battlefield we'll explore next. Subscribe to stay updated on future deep dives, because in Part 4, we'll examine the risks, the hidden opportunities, and deliver a final balanced reflection that could change the way you view the crypto landscape. As we reach the final stage of this comparison, it is time to look at the risks and opportunities that define the battle between BlackRock and Binance, and what it all means for the future of crypto. Starting with BlackRock, the main risk lies in over-regulation and slow adoption. Its size is both an asset and a vulnerability. With trillions under management, every move is scrutinized by governments, media, and investors. Any misstep or even perceived hesitation could trigger market reactions. Moreover, being tied to traditional finance limits flexibility. If crypto evolves faster than regulations can accommodate, BlackRock may find itself constrained, unable to fully capitalize on innovations like decentralized finance or emerging blockchain protocols. Yet the opportunities are enormous. BlackRock's credibility can normalize crypto for institutional investors who have so far avoided the market. Its Aladdin platform could become a bridge between legacy finance and digital assets, creating products that meet the highest standards of security, compliance, and scalability. BlackRock doesn't just participate, it could redefine how the world views crypto as part of a diversified portfolio. Binance faces a different set of risks. Regulatory scrutiny remains its biggest challenge. From the US to Europe to Asia, governments are demanding transparency, security, and compliance, and the penalties for non-compliance can be severe. Security breaches, market volatility, and geopolitical tensions also pose real threats. Unlike BlackRock, Binance cannot rely on institutional gravitas to shield it from consequences. Every user-facing misstep can ripple across the market. But Binance's opportunities are equally powerful. it has the ability to shape the digital economy directly. By empowering users globally, it creates a decentralized network effect that could make it indispensable in regions where traditional finance fails. Its agility allows it to launch products faster than any legacy institution, and its user-first approach drives adoption on a scale that Wall Street can only dream of replicating. So, what's the final reflection? This isn't a simple battle of winners and losers. BlackRock represents legitimacy, trust, and institutional power. Binance represents innovation, speed, and global accessibility. Together, they illustrate the dual nature of crypto's evolution. One foot in traditional finance, one in decentralized disruption. The future likely belongs to whoever can harmonize these forces, bringing trust to innovation and innovation to trust. Think about this. The crypto landscape is not just a market, it is a mirror of how finance itself is transforming. Will the next decade be dominated by the institutions that control capital or the platforms that empower people? Perhaps it will be neither, or maybe both, finding a new balance that shapes global finance forever. If you found this comparison insightful, don't forget to hit like, comment with your perspective, and subscribe to stay updated on future deep dives. Your thoughts could spark the next big conversation on crypto's future.